Well, hello traders. Hope you're having a wonderful weekend. I'm just posting my weekly analysis. I hope you had a great week too. I know we had a crazy week this week, so lots of moves in the market, high volatility, and I'm just here to break that down for you, give you my weekly analysis, and give you some few secrets of mine about the market. As usual, every video I drop gems about the market, things maybe some of you didn't know, and yeah, so that you can have a look on at how I trade. So currently markets are closed, 9 hours still open, 21st of July. So there's a huge shift in my portfolio this week. You can see I'm still holding some trades from last month, but on top of that I've added some few more trades this week. On you can even see I've added stocks like Apple, Tesla, Netflix, the US tech index, and then currencies as usual. I'm still holding some from June, and on EurUsd it's saying sell because I have currently lots of sell trade than buy. But I'm still holding the buys, so I'm on both sides of the market currently. Sold at the peak. I'll also overlay the trade next to the screen for you guys, so you can see the buys here and then the sales up here. So yeah, crazy week, lots of moves, and let me break that down for you. Let me show you how I caught both sides of the market. Let me give you our DJPY. You can see our DJPY. I caught a very beautiful trade, right? On the daily I caught the top. It's all ICT, and I'm going to break that down for you. So first, what happened this past week? So this week we had two good USD news, two bad USD news. This we have to move to Forex Factory. So last week we saw high impact. We had when Joe Powell was speaking. Based of previous week's inflation report, market sentiment was bearish. As we know, the XY as inflation data showed that inflation was cooling off. Thus, you know, markets were pricing in potential hint of rate cuts. So bearish DXY, bullish gold. However, during Powell's speech, he avoided giving a clear signal about when officials would have enough confidence to lower borrowing costs. Other members of the Fed policy setting committee have also avoided signaling exactly when a rate cut might happen. This caused market sentiment to shift massively to a bullish DXY and bearish gold sentiment after a new all-time high had been made. So what will I be expecting this week? I'll be expecting markets to do a minor pullback before continuing a bearish continuation until the next inflation data. That will be the PMI, which will come out on July 24th. So yeah, I guess I'll be trading on the 24th. For now, Monday looks boring, Tuesday looks boring, Wednesday, yeah, so I'll be waiting for the PMI on the USD. So PMI here. Other than that, as you've seen, why I sold stocks is because, you know, we had the CrowdStrike issue on Friday. I'm sure most of you of almost 8.5 million computers worldwide were affected by the outage. You know, we had the issue and flights everywhere in the world. Things were just down, and Friday was just down. Actually, most exchanges were down also on Friday, so it was kind of a slow day on Friday. But other than that, we are good. So what do I expect this coming new week? So on Monday, I'm expecting maybe a bullish move on gold, and a bit because, you know, this weekend Israel attacked Lebanon. For the first time actually during this conflict going on, we see Israel strike inside Lebanon. We see they striked their oil depots and yeah, lots of facilities, but it was a retaliation after, you know, the Houthis they attacked and killed one civilian, Israeli civilian. So yeah, Monday's gonna be crazy, so I'd rather keep out. So let's start with the XY. So on the XY, I've called out the last 5 moves. So the last 5 weeks we have been on point, so have to be really cautious to maintain my winning streak. So I called out this move, first move took this drawn liquidity, targeted the buy side, called this move when we were on this leg, called this move, stayed market will retrace, pushed down. Last week I told you guys the objective of the market will be to take this sell side liquidity. So if we move to the daily time frame, real quick, I love analyzing. You know, it's good to analyze DXY first because it gives you a clear picture of what will happen. So this week I told you this demand area was holding price for the longest time, and we finally got to break through, but quickly moved up. So that's like a simple textbook example of a fake out, and we pushed into this weekly fair value gap, pushed up. So what do I think will happen? So we have taken sell side. Ignore this move to the buy side. Let me break it down to you what I expect. So what I expect is maybe prices to push into this daily fair value gap or somewhere here, of which I'm going to show you in another chart where I do analysis too. So I'm expecting prices to push and then go down. Very little chance I expect prices to push past this, actually past this area in general. You see this area, because if prices push above, it will mean now we'll be working in this range, you see. So markets will just be choppy, you know, choppy markets. So markets will just be trading in a range, and that's not what we want. So what I expect is prices to push and go lower. I can show you on my other chart. Love this one. It's this one. Yes, it's this one. So on the daily, let's see. Remember, it's like a dance within a dance within a dance. So there's always a big outlook, the smaller outlook time frames, you know. So this is the move on the higher time frames. So we get to see on the higher time frames that let me move here where it's relevant right now currently. So we get to see the waves and the E wave we sold off. Now we have broken out here. Get to see push, a retracement to this area, and then a continuation. Let's move to the 2-hour time frame. Let's see what's happening on the 2-hour time frame. So on the 2-hour time frame, this is what I'm looking at currently. So what do I expect? I expect prices, currently we're in a corrective move. Remember, markets just moves impulse correction. So we had our impulse, now we've broken out. We are going to retest this area. I'm waiting for prices to reach between the 0.5 and 0.6 fib area. Then I wait for an impulse to the downside. So what does this mean? I expect gold to continue going down, EurUsd to potentially keep on going down, Great British Pound USD to potentially continue going down until prices reach here. Then once prices reach here, I expect change in the state of delivery of those pairs I've mentioned. So gold will be targeting all-time highs again. So yeah, we'll get there. By the way, I hope you took that gold trade. Let me just run to it and show you. I analyzed that trade for you. I gave it to you like you just had to. It was the most perfect trade I ever gave you guys. Look, I told you, I marked it out. I gave you the stop loss, the take profit. What wasn't hit? You could have just started the week. I hope you took that trade, actually. I hope you took, because price didn't close below. We get to see on the 4-hour, I gave you the order block. This is on the 2-hour. So, but you see it still held once, twice, reached down, and prices continued targeting our take profit 2. On our take profit 3, we get to see we had that rejection, but we continued. And this is all the trade you had to take. This one, wait for midweek reversal, catch this other side, but I'm going to break that down for you in a bit. So let's run back to DXY. So what do I expect for DXY? So for DXY, let me move to, yeah. So for DXY, hope you can see clearly this is what's going on. So we had our first wave, second wave, third wave is somewhere here, third, fourth wave. Now the fifth wave, same thing we looked at NSD USD some few months back with you guys on my channel. Fifth wave, market pushed to the upside. So a corrective move, that's what I'll be waiting for. And then yeah, from here I can potentially look for entries. So we'll wait and see. what prices does, but just know DXY, I'm bullish right now. And the fact that money is flowing from stocks to safe haven currencies, and you know, so you've seen stocks are selling off, you get to see stocks selling, but you know, DXY, money just flows within the system, moves from one area of the market to the other area. So I expect, because the Dow tumbled 300 to 400 points this week, right, last week, so I expect that continuation into the new week. That's why I'm short on most stocks and index, and but I'll manage my risks on that. And I love sharp entries. You get to see I just don't take a trade, quality over quantity. Okay, so yeah, so if I move to the daily, here we get to see the reason this area is of significance is because you get to see prices tend to react a lot in this area. Here, pushed down, but immediately went up here. So it's a point of interest, area of control in the market. So it just makes sense that the correction move has to come here, manipulate a bit, maybe to the upside, or just immediately just sell off from this area and push to the downside. So wonderful analysis on DXY. So let's hop onto gold first today. And today I'm going to drop gems on ICT. Yeah, so this on the daily time frame on gold. So we get to see same analysis I gave you last week. The objective was completed. We took out the all-time high. So market structure, remember? So I'm still bullish until markets prove me otherwise, and that will be if we consider this maybe a sweep and then break of character below, so break of structure. So yeah, that's the only time I'll consider bearish setups, but for now I'm still positive bullish. Market structure shows me we're bullish, because look, high, higher high, higher high. Why should I be selling? But got a good trade there. And remember, this sell was just typically based on fundamental analysis. There wasn't really technical aspect to it as to why it should have dropped that much. But if you caught the trade, well and good. But I'm going to show you tricks you should have used. So Elliott wave, what does Elliott wave show me? E wave, push to the upside, another wave. So I would love, if the DXY is climbing, I would love seeing gold coming down to areas around here, maximum at least there. So areas just around this area. So there's a fair value gap here, there's a fair value gap there. So we'll see what gold will do. But you can look for point of interest, or you know, continue with order flow. So we are the premium area, so maybe we push to a discounted area and look for entries from there. That will be my view. That's what I'll be expecting from gold, so that we can push higher. And yeah, so let's move to the 2 hour time frame. So on the 2 hour time frame last week, guys, I gave you this trade. Can't say, you can check my previous video, my weekly analysis video from last week. Get to see I marked it out. I haven't changed anything actually. It's just the same way. The only place I've done analysis on this side, but this area is the same. So let's move to like the 30 minutes so that I can, no, let's move to the daily first so that I can explain to you what happened here. So let me hide my analysis a bit so that you can see. So what you get to see was market, once we broke through the all-time highs, we get to see that we wicked above, and now we targeted the candle range low, this low, and that was hit on Friday. So how could you have caught this trade? Remember, when there's no PD array up here to help you determine where price might bounce from, you use time, you rely on time. Remember, the algorithm is programmed based on time and price, and I'm going to show you that in a bit. So let's move like to the 2 hour time frame. Let's see what happened. We get to see after this high was taken, we get to see again prices moved up and took that high and broke structure, retraced and pushed down. You would have used OTE, but let me plug you onto something greater than that OTE. So what happened here? So let's get into detail to understand what happened. So this is what happened. This was the candle range high. This, see this line there? That was the candle range high. We get to see the next candle pushed up, but what happened? Pushed up again, sweeping that high. Immediately we had a market structure shift. What happened is prices moved down but came back to retrace. If we used our standard deviation and measured, where do you see the fair value gap and price react from? The -2 area. The -2 area is a retracement type of area. So I knew there's a fair value gap. This area prices reacted from well. We had SMT inside a fair value gap. Have you ever known that SMTs can form inside fair value gaps? For experienced traders, I know you know. For people who are learning, SMTs forming inside a fair value gap is a high probability setup. Very high probability setup. If used in the right way, with context. Because here we get to see sweep of liquidity, market structure shift. We're using it with context. So what happened next? We get to see prices again, broke structure, market structure shift. We get to see like seek and destroy type of move where market is taking out highs and lows. So taking out the low, taking out the high. But remember, this area is where we can sell from. So it's a fair value gap. Sold from there. The safest place you can put a stop loss is not up here, because remember, fair value gaps sometimes get wicked above. So it wasn't the safest place. The safest place to put a fair value gap is always at the top. Okay, so put at the top. Then what do you target? And if you would have used OTE, you get to see prices would have just come back to your 0.6 to 0.5 area. Okay, so and also on the 1 hour, I think there was a breaker block. So many confluences to use. So what do we target? How do we know where to target in the market? Take your standard deviation from here to here, measure from the, you see the 0.2 to 0.5 area acts as a retracement area. We get to see prices reacted. So this was my first target. Prices reacted. Remember, we were feeling this inefficiency here, this fair value gap. So we were filled there. Then where did prices go next? Prices went to the -4 to -4.5 area. We get to see market again reacted. So remember, market reacts from some areas in the market, and you can mark out those as your target. And this was my final target. Once prices had reached here, this area is the full expansion area. Okay, remember the 0.2 area was the retracement level, so retraced from there. But if it closes, below the area, now we target this area. So what will I expect for gold this coming week? I can expect maybe a retracement to the upside, a bit, maybe till here, maybe till here, this high, then a push continuation to the downside. Remember, DXY is correct, is in a corrective move. Okay, so and we're in a premium area on gold. I want to buy from a discounted area. Okay, if I mark up my fibs from my highs to my low in market structure, this is a premium area to me. I don't want to buy from a premium area. I want to buy at a discounted price. So I can wait for price to come low within this area, below the 0.5 and the fib retracement. Then I can look for potential buys. So yeah, that's my simple analysis on gold. We're always building up every day. We started with you guys all the way back here, and we build every day with correct moves. 0 losses on gold so far. It's past 4 months, so good work. Let's move to EurUsd. I want to overlay a trade over the screen. Hope you can see it. I'm on both sides of the market. For people who have been following, you know how I trade. You know I like catching the highs, continuations, the lows, all those. And I took, by the way, one thing about me you've noticed is I hate drawdown. That's why I don't use SMC as much, because how I love trading with good entries. And on this pair, I'm going to give you now the secret on EurUsd. Okay, so stay with me as I analyze it for you guys. So what happened? We have a trade from the bottom here, less than 0.01% drawdown on that trade, and it's currently running at let's see, it takes time to load. No point, I'll just overlay it. So get to see we took a trade there, but I was telling you guys we target the buy side liquidity, and we have targeted that, we have hit. End of the day, remember, markets has objectives. Markets are pushed by an algorithm, and this algorithm, its main purpose, it has a purpose in the market, okay? And remember, the task of the algorithm, the primary task of the algorithm is to fulfill every order that's requested, that comes through in the market. So that's the main purpose of the algorithm. That's why we say there's an algorithm. And some of these orders are too big to fulfill. Hence, the algorithm needs to engineer liquidity in the market, trapping dumb money. Dumb money is retail traders. Us, we're the retail traders. So that's what the market does. So in a nutshell, we can see that the task of the algorithm is to engineer liquidity in the way to grab some liquidity. How does the algorithm complete this task? That's the next question you should be asking. So the algorithm does only two things to engineer liquidity. It either takes out an old high or a low, which we call run on liquidity, and or it fills in imbalance, which we know as fair value gap. Okay, during completion of these two subtasks, algorithm engineers liquidity, trapping retail traders. Okay, so based on that, you get to see that it's easy to understand the market from that. So objective, let's just rush here. Let me show you CAD CHF. There's a trade I gave you last time. Let's say we're on the 4-hour time frame. Let me remove this. Look at here, I gave out this trade some 2 weeks, 3 weeks ago on my weekly analysis. You can check out, I think, the third weekly analysis video below this, like consecutively from now to yesterday, last week to, you can get to see I gave out this trade when we were at the accumulation phase. How did I know that the market's primary task was to come accumulate, manipulate, then distribute exactly to this area? You get to see it just wicked the area. See, it wicked the area and the task was done. It wasn't even a high, but why was the algorithm willing to push all this way just to tap into this area and then complete its move? Did you ask yourself why? I gave out this trade when we were here, accumulation phase. I told you market will manipulate, will distribute to this area, this exact area, and I marked it out for you. I said it. And once that task was completed, markets just pushed now to the other side because the task was completed. So remember, there's an algorithm. You have to understand the objective. Either the algorithm is seeking liquidity or filling imbalances. Look, here we had a gap. The market had to push to fill that gap. Once it pushed and filled that, these imbalances and all that, most of them, get to see it moved the other way. Its task was done. So this week, what we got to see was the high, this high getting taken, this high getting taken. I told you guys that. So let's move in closer. We get to see what happened during the week. Let's move to the 1 hour time frame. So if I return my analysis right now, you get to see what I told you last week. Prices will first take out the buy side liquidity, push lower, then push higher, push lower into this fair value gap. We haven't done that yet, and that's what I'm waiting for. Okay, but I told you the objective was simply to take the buy side. On the XY, I told you we're taking the sell side. Okay, so let's analyze this week, and I want you to learn something. You get to see, let me overlay the trade. I took the trade from here, from 1.09351, and I'm holding it till here. Look at it on the weekly, how it looks like a sniper entry. Exactly. So on Monday, what was the objective of the market after a gap down? Market opening. The objective was to fill that area, to fill that inefficiency. On Tuesday, what was the algorithm tasked to do? Seek liquidity. What do? run this low, took this sell side liquidity, tapped into this order block and pushed higher. I hope you're learning something. I said I'll be dropping gems. Remember, this is not a signal channel, it's an educational channel, it's a weekly analysis channel, so you're benefiting all round. So because some people have told me ICT is a bit hard to learn, but if I break it down to you, and remember, ICT doesn't give you everything. There's more to what than there's more to what?
There's more to
no, let me just stop saying that. So what happened this week? Let's look at the 15-minute time frame, guys. So I told you time and price. So on Monday, nothing much, you know, I don't trade on Mondays most of the times. So no, this was on Tuesday, sorry. So I told you the DTCC midpoint always acts as a support and resistance, and it works so well. Look, prices pushed above, became support. It was resistant at first, remember? You know, prices were closing above, price pushed up, became support until news. There's news Tuesday, I think afternoon, that pushed price to this order block, and we took out a low, taking that sell side liquidity. But before, prices just don't move from somewhere. It had to complete also a task. We had to come up, because if you look at this, look, prices had to come back to, because it was like a drop. You see this area, prices hadn't come here, liquidity had built above here, so prices ran that, tapped into that area and just sold off when news came. Moved to Wednesday. What happened? We made the high of the week on this day. I'm going to show you that in a bit. So what happened this day, we get to see we had a sweep of liquidity, took out that low, this low. What happened after that? After us taking out that low, remember the DTCC acting as a support, because you get to see this is a week and a half. But end of the day, we get to see price finally, after taking the low, breaking the high, prices pushed above. But like I told you, price moves from a certain time. So I gave you, last video I gave you cycles, and I told you about time and specific times the algorithm pushes price between the 0.47 and 0.67. We get to see that's where the bullish move started. You see, the bullish move started. This was on Wednesday, and we got to make the high of the week. So move started there, pushed to the upside, and on the standard deviation here that's where we made the high of the week. And remember something else I'm going to tell you today that I didn't tell you. I'm dropping gems continuously, not all in one video. Drawn liquidity is normally reached between the 0.8 and 1. Where did you see the market stopped the bullish move? Exactly at the end of the cycle. Started here, started pushing from here, where it's supposed to push, where it's programmed to push from, and the drawn liquidity, or where it had reached the top at the end of the cycle. Just that, between this time frame, 4, 15 and 5, and just like that, we had made the high of the week. By the end of that cycle, that time period, the algorithm was done. The algorithm. Okay, so what happened next? Come to Thursday. Very interesting week, and here is where I took 2 trades. So that time we had news. We had European Central Bank holding interest rates, says price pressure being still high. So that time volatility goes well with these types of setups. That's why I love red folder news. I trade the news most of the time, if not. You've seen I trade the news and I don't get it wrong, because if the algorithm shows me certain moves, certain patterns before it pushes price, I know price is headed to that direction. So what we got to see was, remember, we were in like a big pendant. Remember, after price was pushed up and you see price moving like a pendant, you know, price is either going to push up or down. But what was the algorithm showing me on this particular day? So on this particular day, so as I was saying, guys, sorry for the interruption. So as I was saying, let's look at Thursday. So on Thursday, we had the DTCC act as a resistance. Price didn't go above the DTCC, and I'm going to drop another secret right now. When the DTCC is negative, down, and the Asia range is also down, guess what the day's chances of outlook being? The chances are 95% of the time the day is gonna be a bearish day and prices are gonna close below the midnight opening price. Yeah, I know you didn't know that. So that's what happens 95% of the time. I should hear questions about it. What if the DTCC is positive and because you see the opening price and the closing price, the opening price is up here, the closing price is down here. What if this one is bullish and the Asia range is let's say negative? What do you do in such instances? That question I'll answer another day. So it's slowly, okay, we're building up to it. So for our standard deviation of the Asian range where I measured, we had this standard deviation, the 2.5 to 2, -2 to -2.5, holding price for some time until news came out during this cycle of mine. So prices were just being held here until this area. So let's see what happened. Let's look at the 5-minute time frame. So during the 5-minute time frame, what we get to see is once this area was holding price, I tried to see if I can continue with the order flow, because remember this move was sweeping this low, pushed to the upside, kind of broke structure, but we didn't close above. So waited for price to come to this area, waited for another block here. Time cycle, what's the time? Is it lying between the 0.47 and 0.67? Yes, it does. Took a trade there, targeted the upside, and drawn liquidity wasn't hit between 0.8 and 1, but after 1 we get to see the next candle just immediately wicked there. But I wanted to close immediately the cycle had ended, but we get to see the candle came and wicked above, pushed below, took down, took out that low. So what happened? We were waiting for news to come out, and once news came out, we get to see this sort of head and shoulder type of pattern where this resistant area came and held price here. If you didn't know, also order blocks can hold the price once they were violated. It's called reclaimed order blocks. I'll teach that next time. But what you got to see is this head and shoulder type of pattern. And where did it align with? Did it align with my time frame? We get to see the first candle tapped into that resistant area and didn't close above. The next candle fell within my time frame, 0.47 to 0.67. Took a trade there, but didn't take a lot of trades there. I waited until patterns had closed below, because remember there was this order block here. So once this order block was violated, I waited for prices to break below, retest. Then here is where I took the bulk of my positions with stop loss just here. Imagine, stop loss is just there. I didn't have to put all this because I want sharp entries in the market. You get to see the second I took that. It's like people who trade head and shoulder, then they trade the neckline and retest. You have to trade it with context, my friend, and know why it forms. Okay, but I don't trade patterns, I trade ICT, so and so many other strategies. So waited for the retest and took the bulk of my trades there. And what did we get to see? What happened after? Let me remove my analysis. Look, once I took my trades there, market dropped until Friday, and that's where I'm currently at. the market. On Friday there was also a minor trade, same setup. Price had to move within my area, my time area. So minor scalp, didn't take it, didn't like it. The reason I didn't like it is because remember, prices pushed, look, the high as soon as price open, pushed below, and we never got to see that high again. Put stop loss above the high. You get to see price pushed. Minor trade, just marked it out, didn't trade it because I was already holding positions, so I could have just broken even and put my stop losses above there. And same thing. The reason I didn't like it is because we are the -4, so it's a full expansion. So what do I expect this week? This week, let me move to a cleaner chart. Searching. Let's look at Forex. So what I would like to see this week is the XY will be going up, so continuation to the downside. So we have broken, so from external areas to internal liquidity, we broke, we took the buy side, so we have this area to play with. We can look for points of interest, but points of interest at least above somewhere here, because get to see also if I mark out this area, there's a lot of activity you can see there. So get to see how prices will act. Retrace, so how prices will act, will it come here? Because remember, the XY is correcting, is in a corrective move. So if the XY will continue going up, and I trust it will, because remember, money is flowing from stocks to safe haven currencies. We had very bad Friday and last week, so so I expect the move on the XY to continue and the push lower on EurUsd to continue. So maybe a retrace, maybe to gain some sort of momentum. There's a inverse fair value gap there, maybe can push down, continue. So we get to see how it will play out. This week is really uncertain. Actually, it's the first weekly analysis I'm doing, and I don't have a very clear picture, but I do have a picture of what will happen. Next we can move to, let's see how EurUsd CHF moved last week. So what I told you guys last week will happen is markets will come, take out this liquidity and push to the downside. Didn't tap to our, remember, order block is a refinement of order flow. So just because price didn't tap there doesn't mean it wasn't correct. This is the order flow, push from down to up. This is order flow, you see. So took out these highs and push to the downside. I told you markets will push, take that and push to the downside. So order block is just a refinement of all this, so that we don't take a trade here in our stop loss there. We refine this, try to make it smaller by looking at point of interest. So it still was a good trade. If you took it, congratulations. This area didn't quite hold, we passed through, but again came above it. I wasn't trying to buy, I just marked it out as I explained last video, because I knew a lot of buyers will be sitting here, but we took sell side. So let's see what will happen. I believe now I should be looking for continuation sell on this pair. Where I have analysis next is NSD USD, just finishing up. So markets have reached my area finally after playing around for a long time. Remember, we started this fifth wave, pushed to the upside. So told you this liquidity will be taken, told you this order block prices will hold and continue pushing. So now we are finally at our area. That was the entry area, but I told you I can't just trade this. This is too big, too. So as DXY will be going up, this one maybe, let's see how it plays out. But I'll be looking for change in the state of delivery somewhere within this point of interest of mine to make my entries smaller and my risk smaller. So we'll see. When order flow changes, I want you also to learn, when order flow changes, once you see, the sell has stopped and the market has started making, such moves, now order flow has changed and we're pushing to the upside. If you don't see order flow change, don't enter a trade. Just don't enter here and stop loss there. But I'm proud that after waiting for so long, the last trade we took was here, but we have a new opportunity there after weeks of waiting. Then the last trade I'll be looking at is Great British Pound CAD. I'll be looking at Great British Pound CAD. It's been a long time. I think the last time I traded this pair was last year. Let me just confirm. It was last year. It had to be last year. Quality over quantity. Don't trade everything you see on the charts. So yeah, last time I traded, last time was December, but the setup was in October, October there. Yeah, very good setup we had there. That was the last trade I took on this. So now I'm looking for buy trades on this pair. So I currently have a trade, but I'll close it out immediately market opens maybe. Then I'll wait for this push here, and then from here I can look for entries from here, targeting the upside. So something to look at. Can move to the 1 hour so that you see it better. Here it is on the 1 hour. So yeah, waiting for that, this area. The last time I took a trade, let's go see the last trade I took. Same, it was SMC, and the way I looked at it, it was SMC and the Elliott wave. Just order flow, you know. I marked out the E wave because the C wave was here, the E wave had to start there. So I was like, it's extremely risky always trading the high, but I waited for change of character, push to the upside. We didn't get to enter our POI. Same with the USD CHF. You got to see we tapped into a POI from October last year, this year, and we took a trade. So same here happened. We just engineered liquidity but pushed to the downside. So these areas which were supporting price started failing, and as soon as we got that, we knew we are going down. So order flow became sell S. So yeah, we pushed to the downside, took a trade here again. We had a buy, but you get to see we returned back to this POI, point of interest POI, after waiting from when was it formed? Around August to December, November, December. That's when, you know, prices went back to that area. Got a good trade, sold to the downside. I was just targeting same place I took these trades here, and after that never got a trade until today. So quality setups over quantity. You don't have to trade much. You get to see I trade very little, but very good setup. So hope you guys have a nice week. I can analyze all these pairs for you, all these stocks for you. Just comment under the comment section, and I'll analyze it for you in the next video. My email is in the description. You can contact me for lessons, or, you know, if you want to just learn how I do it. So yeah, feel free to do all that. Have a nice, amazing trading week. In case of anything, I'll upload a video maybe midweek, most likely after PMI, because yeah, I think I'll be trading after PMI, because right now it's just no for me. Markets are a bit unsure. So yeah, so that's what I'll be waiting for. You guys have an amazing week ahead of you, and yeah, God bless. Cheers. Sorry guys, there's one more pair I forgot to analyze, and that's silver. As you can see, I'm still holding some buys, but I'm holding also some sells, and I'm going to overlay it on the side of the screen for you guys, and I'm going to explain how I took the sell, where I took the sell. So this is gold. Let's go to silver real quick and have a look at it. So let's go to the 1 hour time frame. I've already made the video so long, so I'm trying to hurry up and make this one shorter. So silver, this is what happened this week. I told you last time, guys, prices were here. Once prices had taken the buy side, I told you we can maybe you can maybe look for another entry targeting maybe higher, because I expected silver to actually continue going higher. But what happened, we had this type of head and shoulder type of pattern, and broke below the neckline, retested it. I took a trade there because it aligned with more confluences I use, so took the trade. I'm going to overlay it. I'm currently in the trade. I'm still holding some few buy positions because I've closed most of them here, but the reason I'm holding buys is because I believe prices might change and start moving from here. So if prices break below this level, then invalidated my setup, but that's the sell side liquidity. Maybe it can wick below and change, I don't know, but I'm trusting maybe prices can move from here. So that's something you can keep an eye on. So either prices move like this, go up, target higher, or prices drop from here. We have a drop targeting there, but yeah, this will confirm for me sells, but it's good I'm on both sides. Remember, the first buys we ever took were here. Good trade. So here we have a very good sell trade. Otherwise, you guys have a wonderful time. I'm going to overlay some stock trades with sniper entries I took. Yeah, so have a nice week, and cheers guys.